Welcome back. Now, Lesaka's interim results show strong revenue growth and an improving operating performance, even as integration and funding costs remain in focus. But the market's attention is on its planned acquisition of Bank Zero, a deal Lesaka says could lower funding costs, strengthen its balance sheet, and support deposit-led growth. Lesaka CEO Lincoln Mali joins us now to unpack the numbers and the strategy. Lincoln, thank you so much for your time today. Right at the top, perhaps just put the numbers into perspective for us. Looking at those headline numbers, things seem solid. The group also hitting a major profit milestone.
Thank you so much for having us. Yes, this is a quarter of major milestones for us. Obviously, the first milestone is us hitting that net income positive number for the first time. It's a culmination of years of work to get us here. Also reporting for the 14th consecutive time, a delivery to the guidance that we gave to the market, so meeting our guidance for the 14th consecutive time. And then some of the highlights, when you look at our net revenue, up 16% to 1.6 billion, and then our group adjusted EBITDA up 47%. And also pleasing is that our adjusted earnings are up sixfold to 111 million. So overall, very pleasing set of results, and just indicating the momentum that we're building within the group and the hard work done by the men and women of Lesaka.
And let's talk about, the momentum you are building up, the consumer segment as well as the enterprise segment in the green, posting a growth of revenue growth of 58% in enterprise and 38% in consumer, right? Walk me through the key drivers there, the key drivers of growth.
So if I look at the consumer business, we have strong acquisition, we have of customers. We have also had strong cross-sell of our loans and our insurance. We've had net additions that have grown faster than any other financial institution in the country, including the large banks. And that's significant for us in that consumer division. Our lending portfolio, we were able now to disburse more than 1 billion rands in this quarter to these customers in our segment. And really all-around growth, good ARPU growth in that consumer division. And we've seen our market share moving now to 14.3%, which means that we're now the second largest financial institution after Capitec in that space. On the enterprise side, this is a division that's newly formed. It's really impressed with its performance. Segment adjusted EBITDA 24 million from a loss last year. And we've been able to get some very good clients like ShopRite, like Investec, like Spar Group, that give this business much more room for growth in the future.
Yeah. Zooming in on the consumer segment, you mentioned there growth when it comes to the loan book. I'm wondering how you've been able to manage that loan book. I know most of your borrowers aren't first-time borrowers, but I'm sure there's still some risk there. What does that book look like when you think of bad debts, credit impairments? Walk me through that.
We have been very fortunate in the sense that we've been growing this book steadily over the number of years. And so today, 78% of our clients are repeat borrowers. Secondly, 80% of our clients have been with us for more than 2 years. That gives you a sense of the quality of the customers that we have there. And we've got a credit loss ratio that is below 6.5%. Which means it's a book that is well managed, and it's a book that is growing, but growing responsibly.
Okay.
And part of the reason why the book is growing is that we listen to our clients who were saying to us that the maximum 2,000 rands that we'd been having for them and 6 months term was not good enough for them. And so we extended this from 6 to 9 months and increased the loan amount from 2,000 to 4,000 rands. And that has given our people better opportunities, because many of these clients can only borrow from mashonisas because no other financial institution would lend to them.
Yeah.
We saw them as a market, we've been working with them, and now we're able to have a book of that size and a book that's well managed.
Yeah, important on that front, really responsible lending, because we do know the interest rates that come with mashonisas here in South Africa.
Indeed. Indeed.
Lincoln, I want us to touch on the merchant division before you walk us through that Bank Zero acquisition. So just quickly, I know that unit is within a restructuring phase. When will that be completed?
We see this process going on until the end of this financial year because we are pulling together 4 businesses under a new leader, Kagiso Khwale, and Roland Naidu as COO. So the CEO is Kagiso Khwale. And we think that in this time, they will be able to pull new teams together, overlay a new solution set that takes into account the 4 businesses, the old Kazang, the old Connect Group, the old Adumo, and the old GAP. And they'll also be rationalizing the business and pulling the teams together. We think that between now and year end, we can expect flat growth from that business, and then into financial year 2027, you can start to see the fruits of their labor coming through. So we are comfortable that at a group level, we've been able to reaffirm our guidance for the full year with the muted growth or growth, within the merchant business.
Where are we at with the Bank Zero acquisition? I do know that you're still waiting for approval from the Prudential Authority. Any concerns about that? Is there a delay there? What's happening?
We like the people on the outside ready for a game and allowing the ref to start the game. We respect the Prudential Authority's timelines. We are engaging with them. They ask us questions and we're able to respond to those. So we're hoping that this will be still on this side of the financial year before end of June. But obviously, it's still in the hands of the Prudential Authority. But on our side, we're preparing. We're preparing our teams, and we're making sure that as soon as that approval is there, we're able to take the full benefits of an acquisition of this nature.
All right. Hopefully, when we catch up again in June, that deal will be sealed. Lincoln, thank you so much for your time and taking us through the company's numbers. That was Lincoln Mali, CEO of Lesaka.